This week's video is a friendly PSA to all my different types of investors out there, and in particular, we're going to talk about the important distinction between tilting and timing. Okay, so we'll get to our different types of investors here in a moment as we work through, again, tilting versus timing. Semantics, perhaps to some, an important distinction to us here at 10 Capital, some general characteristics that we think differentiate between the two. So, to the tilters out there, which is how we would define ourselves here at 10 Capital. These are people who rarely are going to abandon an asset class, feel the need to make a big call, but they are going to rebalance. They're going to look at opportunities, but probably in a way that would be counterintuitive to a lot of other people, in the sense that they'll be selling things while markets are great and rebalancing into those things that may not have been keeping up to, again, keep a level portfolio and more times than not embrace that old adage of sell high, buy low. Timers, on the other hand, these people need to make a big call. As we're going to talk about in this week's video, they're the people who are scared, believe markets don't work, and they're running headlong into cash and CDs and other things that are finally paying them a little bit of a yield. Or conversely, they're chasing the NASDAQ stocks, the story stocks, which these days tend to be anything that can put AI into the headline. And if you've looked at any type of the data as we do around quarterly earnings calls, everybody from people trying to sell cereal to the latest and greatest technology product are finding a way to talk about AI. And these people tend to chase and or run. So they're either going to be running from bear markets or chasing into bull markets. They're going to be looking at past performance rather than relying on a properly built plan or portfolio as they're making their investment decisions. For the bears out there, they're looking at CDs. Think CDs have their place. Think plain old cash and savings account have their place. Don't believe they're a panacea of a perfect portfolio ever, really. But even now, with those headline rates of 5-6%, for a few reasons. If we look at it through that live paradigm, they tend to be pretty illiquid. So whether it's the ability to go after a new opportunity or just an unexpected life event, it can be locked up, some early withdrawal penalties. The income, while on its face, on a headline level, looks really attractive right now, you got to keep in mind it within the context of total return. There's a great quote by a gentleman, Mr. Best from Investopedia, who talked about, if you look at true return of CDs over time, they've been abysmal. You've got to take into account taxation, the fact that you're not getting that whole headline number, the government's going to take part of it, as well as inflation. And when you look at that, again, over time, even today with current inflationary rates, you are losing money all the time. It's something that Bob Carey at First Trust put so eloquently, losing money safely. And so you may not feel it, but you are that frog in the proverbial boiling water. Conversely, you've got a lot of other people chasing markets into all-time highs. Bullish sentiment has hit a 2-year high here just recently. Bespoke put out a great piece where they looked at current equity prices versus their 50-day moving average. They're in an extreme overbought territory. CNN's Fear and Greed Index hit an extreme greed level this year. Again, we would never tell you to get timing, but if we're talking about new allocations, chasing things at this point in time, history would strongly suggest this is one of those buy high, not buy low moments for new investors. The other important thing to keep in mind for those of you feeling that need to chase those story stocks here of late is be honest with yourself. Really go back. If you look at NVIDIA, one of this year's market darlings, it dropped 2/3 of its value from late 21 to the end of 22. I know very, very few people, including probably myself, who could stomach watching that kind of a drawdown and truly stay the course to get back to where we're at today, which for what it's worth is just a 13% gain from peak to peak. Similarly with the NASDAQ, almost 1/3 of its value eviscerated last year. Certainly believe this should be a part of a portfolio, but if this is all your money or a big, big portion of your money, keep in mind the volatility of that live, how you want your portfolio to live metrics, very, very high when you're chasing some of those story stocks. Lastly, I want to give a shout out to all of you out there, which is most investors, and certainly in our experience, the most successful investors, the happiest investors, who do not engage in this types of chasing. I think a lot of times these commentaries don't speak to you because you're behaving. You're the good investors that don't get the kudos you should or the attention you should because you're just doing the right thing. That is most people, and in our experience, again, important to note, there tend to be the people we see smiling the most, finding the most contentment, telling us about things that they're planning to go do. And so our encouragement to all of us, because we all can fall prey to being a little bullish or bearish at times, is to seek that plan, that portfolio, not just because it's theoretically the right thing to do, but practically speaking is going to help you not only have great results, but great results in life and contentment as you move forward. So in conclusion, rebalancing, tilting, usually things, again, that are going to be counterintuitive to your nature. Again, a path to success, something we certainly would encourage and embrace here at 10 Capital. Any of those things that start to move you into timing, be leery of. I know people will say, no, I'll get out or I'll get back in. You won't. Whatever that powerful narrative was that drove you to an extreme allocation is only going to get more extreme when you're in the grips of that bear market or you're feeling that euphoria of that bull market. We're here anytime to walk this walk with you. It takes a group, it takes a team, and we're so glad to be working with so many of you. Thanks.